Today, we'll dive deep down into the pharmaceutical field and I'll share with you my stock analysis on a company that might be the future of healthcare delivery. So we'll see together if the Aquestive Therapeutics company with the ticker AQST is currently a great stock to have on your watch list. Once again, to be able to see what this company is about, I'll be checking out first at what is their current business model, so how are they able to generate their income and who are their different customers. And after, I'll make a quick fundamental analysis on this business to see if it is currently under or overvalued at the moment. Without further ado, let's get to it right now. Aquestive Therapeutics is a renowned pharmaceutical company which is mainly focusing in the creation and in the commercialization of their innovative products, which have the objectives to address unmet medical needs. This firm is specialized in using their brand new technology which is known as PharmFilm, which is a technology that provides the possibility to its users to receive some oral delivery medications. As you can understand, the treatment of it is quite easy and it is quite similar to if you were using a Listerine that you'll be putting just under your tongue, and after a few seconds the tabs will dissolve in your mouth and it will transport all the important nutrients that you can find in it. This unique approach has notably helped Aquestive to become a leader in its field, and with the global aging of the population that is set to increase massively over the next couple of decades, well, this kind of company will obviously take advantage of this kind of big opportunity for them. In fact, the numbers don't lie when it comes to this company. Indeed, by having over 200 patents under the name of this company that can be found in 4 different continents, to this date there have been over $2 billion that have been consumed by the different patients over the last couple of years. Plus, their important products notably include Zoplenz, Sympazans, Erzevans, Kinmobile, Asteris, and Suboxone. As you can see, Aquestive is offering great alternative to the classical drug pills and drug liquids to problems such as nausea, diarrhea, and headache. However, their flagship product is called Sympaza, and it is an FDA-approved treatment for Lennox-Gastaut syndrome, which is a rare form of epilepsy. This company also has several other products that can be found in various phases of development, which are targeting different therapeutic areas such as the nervous system disorders and different allergic conditions. That obviously means that as being a great pharmaceutical company, Aquestive is investing a massive part of their total earnings into the research and development, which help them to develop new treatments to be able to revolutionize the medical field. It is why through time they've also been able to create new partnerships to be able to expand the scope of their operations, notably by building crucial partnerships with Sunovion and Kipla. These partnerships obviously provide some important financial support to this business while also receiving more expertise and to expand the scope of their commercial activities, which at the end help Aquestive to increase their position in the market. But just like any pharmaceutical company, Aquestive's success is directly linked to the regulatory approval. Keeping an eye on the regulatory landscape and the potential update is also crucial for the investors, because at the end of the day you want to invest in a company that will obviously be able to sell their different medications. But in the case of Aquestive, with over 200 patents to their name since its creation in 2004, we can see that this company is successfully able to have some legal medications that they are able to commercialize. Nevertheless, now that you've seen what this company is all about, let's see what the numbers are telling us about it. In terms of the valuation of this business, we can see that currently worth slightly over $100 million. However, we don't have access to its current price to earnings ratio, but in that case, we'll be using what is the price to sales ratio, which is basically a simple ratio where you can compare the total market cap of this business with its total revenue. And in that case, with a ratio of about 1.72, we can see that it is considered as a pretty good company on that side. However, over the last 12 months, unfortunately, since it is a small company, we can see that it hasn't had some great profit and operating margin. Nevertheless, over that period, they've still been able to generate close to $50 million of revenue. However, with a slight decrease of close to 10% in their latest quarterly revenue growth. When you take a look at its total cash position of about $27 million compared to $48 million of debt, you can understand that this company is still depending a lot on its total debt. But one of the most important things that you need to understand when you are investing in that business is the total volatility that comes with it. Indeed, with a beta on the 5 years period of close to 3, it means that this stock will tend to fluctuate over 3 times more than the market. It can be very positive, where over the last 52 weeks we can see that it has gained over 100% of its valuation, but keep in mind that it can also be pretty negative as well. And an interesting fact about this business is that over the quarter of it is controlled by the institutions, meaning that they obviously have some big trust towards this company. After, in terms of the total revenue of this business over the last 4 years, we can see that they've stayed pretty much the same, but the good news is that their earnings before interest and taxes are actually progressing in the right direction. And the picture is quite similar in terms of their operating cash flow that are still negative, but that have made some great progression over the last 4 years, which have been reflected in their total free cash flow progression. And the good news for the AQST investors is that over the last quarter, they've been able to massively beat the earnings per share prediction of about 275%, and they've also been able to beat the revenue prediction of about 12%. As you've been able to see in this video, this company is still super small with a market cap of less than $100 million, but with the current medications on which they are currently working on, it might be a great idea to keep it on your watch list if you're not afraid to take the risk that comes with it. But on your side, if you're looking to invest in a more stable biopharmaceutical company which might be the future of the cancer treatment, well, check out the video that's gonna be right over here, and I will see you soon. Peace!